Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. Again, thanks for listening. Give us a call if you have any questions today or if anything resonates with you, 612-504-8400. Visit us online at havenfinancialgroup.com. Kim, we got Glenn Ramey on the show with us today because everything is going to kind of gear around insurance, the needs of, the needs not for, why the pros and the cons. So it's good to have Glenn Ramey, our insurance specialist at Haven Financial Group, and good to be with you again.
Great to be with you. And Glenn, thanks so much for being a part of the show today.
Thank you.
Absolutely. Yeah, we're going to talk about insurance in retirement and how it fills the gaps. Insurance, I don't have to tell you, Larry, for sure. Insurance can be a very confusing situation for a lot of people. It certainly can play an important role. And over time, insurance has taken on sort of a different meaning to a lot of people. They use insurance for different purposes than it used to be. Life insurance, you used to have life insurance so that when you died, there was a way for your family to bury you and take care of maybe some of your left bills, and that was that. And the idea of long-term insurance for the longest time has just been sort of out of the question for so many people because of the expense. So today we're going to talk about all of those things and much, much more, starting with an overview of retirement health care and long-term insurance. Then we'll talk about life insurance and its use cases for retirement. Annuities, annuities are an insurance policy, if you will. We're going to talk about how they work and whether they're a good option for you. And finally, we'll chat about the costly insurance mistakes that you want to avoid. Mistakes. We always want to avoid those, but certainly we want to avoid the costly ones. That is for certain, right? But taking a look, Larry, at the overview of insurance, health insurance, long-term insurance, these are things that are very confusing and I think scare a lot of people.
Well, they do. And insurance in general, it can be a safety net or a safety valve, or it can be one of those expenses that we hate to pay for, but if called upon, we better have it. So what's too much insurance, what's not enough insurance. These are the things we're going to cover, why you should have it, why maybe you don't need it. But there's all types of insurance. And that's why, again, it's good to have Glenn to kind of shed some light on why we should review what we have, talk through about different insurances that maybe you don't have, that maybe you should have, and what's the right amount. And again, the last segment you mentioned, avoiding these mistakes, as many as we possibly can, learning from other people's mistakes and minimizing the mistakes we make ourselves.
Absolutely. Well, let's dive in, shall we? And Glenn, we're going to start with you, of course, and talk a little bit about, healthcare is one of those really expensive costs in retirement, and insurance certainly is a part of that. So let's talk a little bit about what people can expect when it comes to health insurance in their retirement years.
Yeah, let's start with a staggering statistic right now, which is to say that an average 65-year-old entering retirement today could be expecting about $165,000 in healthcare expenses throughout their retirement years, not including long-term care costs.
Yeah.
So combine that for a couple, we're talking $330,000 in combined healthcare costs for a couple retiring right now. And again, that's not counting one of the most expensive forms of care you might receive in the end, that long-term care component.
I think what's shocking about that is most people think, well, I'm just going to get on Medicare and I'm not going to worry about it and I won't have to spend any money. But that's not the case, is it?
No, that's going to be sadly not the case for most of us in that circumstance. That Medicare has some components to it, right? That insurance we get when we turn 65 or later if we're working past 65 or sooner if we're disabled or have certain health conditions. And it's going to include those components, that Part A of Medicare, in the easiest and simple terms I can give it to you. That's your inpatient benefits of Medicare, when we prepay for with taxes. So as long as we or our spouse has worked 10 years or 40 quarters, we get that one at no cost to us. And then we have the Part B benefits of Medicare, right? And the simplest way I can describe those are your outpatient medical benefits, right? For doctor appointments and testing, outpatient surgeries, durable medical equipment, ambulances can all fall under that category. And that's the one that's going to have a monthly cost to it, right? $202.90 is the current going rate for Part B of Medicare. And then you're going to add in a drug plan with those benefits, an advantage plan that might wrap all those benefits into a package, or a supplement plan that might join those Part A and Part B benefits for you. But when it comes to that that connection. So that's your healthcare, right? You're going to have premiums and exposures to out-of-pocket limits on those insurance policies. And even a high-end plan might have someone in a catastrophic chronic healthcare situation paying $5,000 to $6,000 per year in premiums and healthcare bills, another $2,000 on top of that in medication costs. So it's not impossible for a consumer today to be paying almost $10,000 or more a year for healthcare expenses just for themselves in those more extreme scenarios there. And when we come to that long-term care component, here's where people get a little confused or don't realize Medicare is about recovery and recuperation is the simplest way I can put it to you, Kim. It's about making us recover from an acute healthcare event. So just use as an analogy, an example. I'm perfectly fine on Medicare and I have a stroke, right? Now I'm not fine. I need physical therapy, speech therapy, occupational therapy to recover. But the moment the therapist tells me that that therapy is now plateaued, I'm not improving anymore, right? And I might not be at 100%. I might be at 70 or 80% of what I used to be able to do. And I might have long-term care needs right now, help eating, help transitioning from laying down to standing up. These are components of those activities of daily living connected to long-term care. And now our healthcare is not going to help us with maintaining those costs, right? It got us to the point of we're recovering, but it's not extending beyond that. Another component of Medicare I can quickly say is that 100 days of skilled nursing benefits, right? Every time we're hospitalized for 2 days or longer, we're covered for up to 100 days of that inpatient therapy in a nursing home setting. Well, again, the reality is you have to be recovering. And after 6 weeks, if your physical therapy is plateaued and you're done recovering, you're not getting those extra days, right? They're not going to give you that full 100 unless you're recovering during that time. So just understand that, as we say, that the healthcare when it comes to Medicare is great for covering those medical bills and helping us recover, but it's not there to maintain us throughout our retirement and life.
All right. So now we've talked about your health insurance. Let's talk about long-term care insurance, which is something a little different than what we've just chatted about.
Yeah, so long-term care insurance is going to combine a few components together to cover these costs that you're going to incur and related to what they call custodial care needs, caring for us, right? And this is going to be anywhere from home health care. It's going to include adult daycare services. It's going to include assisted living facilities and the expenses related to being in one of those facilities. And it's going to go all the way to that inpatient stay at a nursing facility, a nursing home, right? And a good long-term care policy is going to hit every single one of those care needs. It's going to help you from the beginning at home health care to the end of that skilled nursing care, wherever we stop in between in that journey.
So this is the insurance that I think scares people the most. And they probably think, well, it's really expensive and my kids are going to take care of me, so I'm not going to have to worry about that. Give people an idea of how many people actually need that kind of insurance and maybe just, some cursory ideas about how you can get it.
Sure. So, yeah, I hope you talk to your kids if that's your plan. Right? I hope they're aware that they're part of that plan for you, because often you haven't disclosed that to them. But we get to this, right? So the need for planning, right? Again, 70% of us are going to need some form of assistance before we pass away. That's just raw statistics. 50% of us will spend time in a nursing home. Whether that be a week or 10 years, the average is 3 years, right? Just shy of that for a man, just a little over that for a woman. Let's say the average there is a 3-year stay. And currently we're seeing the cost of that skilled nursing stay exceeding $10,000 per month median, right? Now over $120,000 a year in the middle cost to be in a long-term care facility per year right now. So, and again, we go back to, I hope you're planning for that expense, because if that's a 3-year stay at $120,000, we just got you $360,000 of bills you're going to have to take care of or insure against if you're worried about it, right? And we talk about the insurances that we can do. There's traditional long-term care insurance. There's life insurance with riders for long-term care. There are hybrid life and long-term care combined products we can do. And there's also asset-based long-term care, repositioning savings in a financial vehicle that leverages that savings against long-term care costs in the future.
There are options that people should explore. That's the thing that I think is the most important point that we need to make to people. Because again, I do really believe there's a generation of individuals out there, many of whom are just starting to head into those retirement years, that believe that it's too expensive or not doable for them.
Right. And I would make the argument, it's a cost. You're going to have it one way or another,
Mhm.
whether you're writing checks out of your savings account and retirement accounts, or whether you're making a claim on an insurance policy, the cost is going to be incurred. And so whether you want to leverage your dollar now so you have more of it later to use for those costs, or take that risk on your portfolio, I think Larry would agree with me in this. The consensus here is to plan, right?
Mhm.
It's to talk to someone, find out your options, find out what you can do, what are the costs associated with those options, to see if there is any one that you can line up for yourself to help you in those circumstances. And even for someone that saved modestly for retirement, that long-term care planning, even if it's not a Cadillac fully paying for care kind of insurance, there are protections included in that plan that could protect your money from Medicaid, that can make sure there's something left for your surviving spouse,
Sure.
something left for your children to inherit from you, and that the biggest beneficiary of your retirement portfolio hasn't turned out to be the nursing home instead.
Absolutely. HSAs, very quickly here.
Yeah. Health savings account, great vehicles. Pre-retirement, they're great for funding our medical bills pre-tax. If we fund them strongly, it's another tax vehicle later in life, right? That we can then use these tax-free dollars to pay for certain healthcare costs, whether that be certain Medicare premiums in retirement, or even connected to certain long-term care insurances that we can use our HSA money for. But it has those three tax-free components: tax-free going in, tax-free growth while it's there, tax-free distributions if it's related to those qualified expenses.
Okay. Go ahead, Larry. What were you going to say?
Kim, a takeaway from this segment, because we're really just scratching the surface. And, navigating healthcare options, it can be very complex. And maybe it sounded really complicated because it can be complicated. From Medicare coverage to the long-term aspects, the long-term care, nursing home. But Glenn said it eloquently. Understanding your choices is key. And there's many choices out there that I don't think listeners are aware of. We want to make you aware of it. And again, as I mentioned, we're just scratching the surface. So give us a call. Sit down with Glenn. If you can't tell, he's a breadth of knowledge in this area, very much so, in all these insurance areas. Sit down with him, look at the options, whether they're reasonable, whether they're for you, whether they're not. Maybe you have long-term care. You don't even know what you have. Get it reviewed, just like your life insurance and anything else. Have a partner that you can lean on to make sure you're doing the best you possibly can with the options that are out there.
612-504-8400 is the number that you call to reach the folks at Haven Financial Group. Set up an appointment. Tell them you'd like to come in and talk about insurance, or for that matter, anything related to retirement. It's 612-504-8400. Coming up next, we're going to talk about life insurance. This is the Haven Financial Group Radio Show.